What exactly is debt to income ratio and how do you calculate that? Because it's a really important topic. Hey guys, what's up? It's Angelo Christian Financial. Thank you so much for watching our podcast, The Real Estate Insider, Where America Goes for Funding. Call or text Angelo Christian, your direct nationwide lender, 832-431-6331. Today we're talking about debt to income ratio. What exactly is debt to income ratio and how do you calculate that? Because it's a really important topic. A lot of loans require a debt to income ratio calculation. You have to know what that debt to income ratio is. There's your front end debt ratio, and then there's your back end debt ratio with all of your debts combined. Your front end debt ratio is just your house payment. And so for like conventional loans, they don't want your house payment to exceed 30% of your income. That's your front end debt ratio. For government loans like FHA and VA, it's usually around 40 to 45% of your earnings can't exceed for your front end debt ratio. Your back end debt ratio is all of your debts, including the house payment. For VA, it can go up to 60%, FHA up to 56%, conventional, anywhere from 41 to 50%, depending on the program, non-QM up to 50%. And that's where they tally up all of your debts, and then they divide that by your income, determine what that monthly, total debt ratio is. And based on the program that you're doing will determine what the debt ratio limit is. We offer all these different types of programs as a nationwide commercial and residential lender. So if we can help you, please give us a call or text us. We have all different types of programs: FHA, VA, jumbo, lines of credit, no documentation, everything like that. Reach out to us at 832-431-6331. Give Angelo Christian a call. We're open 7 days a week for you. Call or text Angelo. Thank you.